Good morning, everybody. This is Mark, and we're back here for T3 Live. It's Friday. It's the morning call. Interesting week. If you look at the S&Ps and you look at the spiders, basically we've digested for about a better part of almost 2 weeks with a little bit of a breakout yesterday. That breakout should have some follow-through, should stick, albeit it's light volume, which is everybody's on CNBC, every pundit, everybody's saying that's bearish. Can't disagree, except you can't fight a trend. It can be bearish for a long time on light volume. We've had light volume, and the volume has been going down historically for years at this point. So that being said, we could be at the top end of our range. I've been taking a little bit off on the long side. That doesn't mean we're going down, but it means I'm just trying to reduce some risk a little bit. The oscillators are getting around 38. If we're up a little bit this morning, you get to the 40-50 level. That's where, again, you probably get a little bit of selling, and we go from there. I think we still might have a little bit more room today. It is options expiration, so we'll have to wait and see. But overall, guys, things are looking good and lots of rotations happening. I mean, you can just say every day of the week there's been a different industry that's been strong. You know, yesterday you could make an argument that it was the home builders. They all have been basing. We were talking about buying them early in the week, and you know, I personally didn't really stick with it. I have no idea why, but such is life. But look at Toll Brothers, best in breed, new highs, new yearly highs, new I think 4-year highs. Len, same type of trade. Ryland, we can keep going down the list. This is the key, guys. They're basing. If you're not involved, if you're not watching it, you're going to miss it. That's where we're at in this tape right now. And that's just what's important and what we have to look at. So that was yesterday. You had obviously high beta. 2 days before that, you had Amazon. You had a few other stocks. Now, today, Friday, what are we going to do? Is there going to be a little bit more digestion? What's going to be the group? Is there going to be another group that really shows its face? We'll have to wait and see, certainly. But a few ideas. Apple gapping up a little bit this morning. I think it was upgraded. But it looks like 644 is in the cards. And I personally don't see why that stops at 644 just because it's at a new high. I think you're going to get momentum over the next week or two or 3 into that product release of the iPhone 5. So keep it on the radar. I've been long, net long. I'm staying net long. Obviously, you're going to have to deal with the gyrations at this point in time, but it gives you a day trade every day also, so it's certainly something to keep in mind. 630 looks like it holds regardless. 644, it's above yesterday's high or the previous high early this week. 644 is the next level you got to really look at. Google also, new best in breed. Not buying it up here, need some more time to digest, but what happens is when these stocks become so strong, they don't digest the way you want them to, and that's really what we're seeing, and that's key. You have to recognize it, you have to be aware of it, and ideally you want to take advantage of it. You know, a stock I thought was going to rest yesterday a little bit more, had some news, headline news, but FIO looks good, and you know, nice basis. That's what I look for, 3 to 7 days of basis, and possibly 9 days of basis, for stocks to ideally move out of move out of the ranges. An industry I'm watching, I put some feelers out there, and we've been talking about it, but there really has not been day trades. Very tight ranges. The banks, brokers, consolidating at upper end of its trading range, really non-existent volume right now. Basing, consolidating, that's all healthy. JP Morgan right now is hovering above its 200-day moving average. Right now above its 21-day, above its 8-day. That's good. That's healthy. As long as it stays above 36, looks decent. Probably getting involved between 36.50 to 37.50. We'll add above 38 for a move back to 40, which would be filling that gap. That will probably get Goldman Sachs. Same type of thing. Buy it at the lower end of the range, 101 to 103.50. That area. A move to 105, probably be adding a little bit more with aggressiveness. You could just say, you know, Wells Fargo, a little bit slower, but, you know, adding in this area, adding above 35, GE, keep going down the list, 2075, 21, seems like it wants to go higher. So there's a trend. If you're not watching them, you will miss them. But at the same time, it certainly shouldn't be, you know, overly attentive. And I feel like that's what a lot of people are doing. They're like, oh, am I looking at it? Get involved in a tier 1, get involved in a feeler, get used to it. You might have to sit for a few more days, but these are, you know, an industry group. When it actually does break, whatever way it breaks, most likely it looks like it's to the upside, at least right now. You'll get a real move, and you'll get some continuation on that move. And then other best in breed stocks, guys. I don't want to get people all bullish right here. I have taken some stuff off, but you're starting to see a trend. You're starting to see stuff that has been beaten up. You can go from, started off with Pricelines, go to Netflix, go to FSLR, go to GMCR. Trends. Beaten up. Some of them were market leaders. Obviously, Priceline was a market leader, trying to regain some luster. Going to get some resistance around the 200-day, $600. So you got to wait. But these type patterns you should be looking for and finding. DEC did it the other day. Had a move up, and it looks like 50s in the cards. GMCR did it 2 days ago. After earnings, did a base. Now it's basing again. Looks good. Same thing with FSLR. Looks good. So, my next project is CMG. I think it holds above 300. Same thing. 304 is the next resistance. Above that, 310 to 315 in the card. You don't have to overtrade it. That's the key. I think a lot of people are just like back, forth. Have levels, wait, and that's what the market's telling you. At least right now, market's rewarding that type of action. And then obviously the best in breed, we know it. Amazon. It seems like Baidu's back in play. MLNX, Amgen, eBay. The list is too long. Cirrus Logic is on the radar. The list is quite frankly too long. Scares me a little bit when I'm tripping over myself to look for a bad chart, and I really can't find one. When I'm looking for a good chart, it's like I got to go through 3 stocks. I'm like, oh, they all look good. Doesn't mean I'm aggressively buying putting new positions in the long side. I think I would like to see digestion in the tape overall, but we did digest for a week and a half, and some of these stocks that are basing did digest for almost 2 weeks. So if individual plays start to break out of those levels, I will be involved. You'll be hearing it on the virtual trading floor. But ideally, you got to do your work. You got to own your ideas, and that's how you get conviction. Because quite frankly, we're not going up in a straight line from a day-to-day basis, even intraday. It's a lot of ebbs and flows you're going to have to take. And if you don't have prices and you're just watching your level 2, you're probably going to get yourself turned around. So overall, we look good. S&Ps look good. Qs look good. The IWMs, which were lagging, seem like they're trying to get some luster. Maybe it has a quicker uptick today, back to the 82, 82.50 level. Over the next few days to try to match the spiders and the Qs. But we'll wait and see. But rotation. Do your homework, and that's where we're at. The oscillators get up to close to 50. I would be taking a bunch of longs off, at least temporarily. But overall, we broke out a little bit yesterday, understanding we've had a nice 2-week run. So, means you're going to get some back and fill in somewhere. I'm waiting for the headline news to come and, beat the market up. It hasn't happened. I know that's what others are waiting for. It might not happen the way everybody wants it to. It seems slow on the headline front, and it's August, no earnings. Everybody's away on vacation. So, keep that in perspective, and I think it'll keep you on the right track. Good luck today. And if I don't talk to you, have a good weekend.
Hello, everybody. My name is Pete Renzulli, Chief Marketing Officer of T3Live.com. Really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Come down and expect to have a great time.